Welcome to Trading Lounge and the US stocks for the 11th of June. It's Thursday, so we'll be looking at Alibaba, Goldman Sachs and Exxon. So starting with Alibaba here, and we'd been counting this as wave 1 here, an A and a B and a C for wave 2 here, and then looking up here for wave 1 and back for wave 2 at that stage. So let's go in and take a closer look. On the 4-hour chart here, we'd been looking at being long from this low here, just above the major trading level 2 here. So we were looking to build in some positions here and also take profit or a percentage at the new high above this one here when we were speaking last time we spoke. Let me clean this up here a little bit here so we can get in amongst this. And I'll just delete that. So we're looking for a pullback here, and obviously that normally we look for for wave 2, we would look for a pullback in this. We'll check to see if that's the top in the moment, but I can see we've got wave 1 and 2 here and 3 and 4 here and going up for 5. There might be a little bit more there. I'll just check on the intraday in a moment. But what we're looking for here is this pattern here, right, to go long again. So we looked at this as the arrival, the reaction, and now we'll look at the first high above the level. So the arrival, the reaction, the first high above the level there. And we normally have a little picture for that. So this is the picture, the classic trading levels pattern, the arrival, the reaction, the first high above the level, and then we look for the pullback. Once we've got the pullback and then we're sitting on the level again, then we can move in long again. So that's where we are at the first high above the level. So let's just go in a little bit closer here to the 100 ticks here to have a look at this structure to the upside. I think that's 100 ticks. I'm going to go into 20 ticks. I've been doing a bit of work on this. So let me just bring in a little bit more data here. So from this wave 4 low that we're looking at here, I'll just do my best. I'm happy with this wave 1, wave 2 here. This wave 1 I'm not sure about here. I was kind of thinking 1 and 2 and 3 and 4 in here and then moving up for 5 into here. But I've got to redo that, relook at that. But I'm happy with this here where I've got 1 and 2 and 3 and 4 and 5 here and ABC for 4 here. And happy with this as 1 and 2 and 3 and 4 and 5 here for the third wave. So technically we'll be pulling back to the fourth wave here into this space here that can take us down to the 222 area through here as an A wave and a B wave and a C wave here. So we can have one more high here. That's what I'm trying to say here. But I'm not that fussed about this actually. So we may have a top in, we may not, or we'll just come back to the wave 4 of 1 lesser degree. The main point is here is that you should have been taking profit in anywhere in this area through here for this. Okay, so we can get an ABC back into here for wave 4 and then up for wave 5 here. In one way or another, we're looking for a top here to come into play, and I'm not really interested in chasing this. I'm just wait for the correction to come back. So if we go back to the 4-hour chart here for a second. So with this here, we're looking at that little leg here. So there may be one more little high in here. I'm not quite sure about that, but it looks okay for another little high to play in here. And then we'll have our A wave, B wave, and C wave pulling back into this space here. So I'm just going to remove this here. Now that can pull back to the 61.8%. So I'll take that just around there somewhere. So it could pull back to this area through here in this regard. So So if you haven't taken profit and you've just taken a percentage, then copy that and we'll put that just in here for that now. I think we should lock that up because there'll be some sort of pullback into here. Look, it may even push up to 230, but that's okay as well. In fact, that's really good. I'd like to see that. I'd rather be working with this number than this number. Not that this one's a drama, it's pretty easy to work with, but when we've got the major level here, trading level 2, and then we've got 1, 2, and 3, 10, 20, and 30. This makes up, these are minor levels, and this makes up the top of this level here. So top of group 1. So what that means that if we get support, if we get this pattern here sitting on here, it will be bigger, but sitting on here, then we're going to be pushing up higher at that point. So for whatever reasons, if we do push up to here and then have this sort of thing happen here, I prefer that because I know at that point what we'll be looking at next is the 250. So that will give us a better risk reward ratio coming up into this space here for that. So that would be good if it went up there. So don't feel like you're missing anything, okay? Because this is the one that we'd want to be looking at this stage. Okay, so all we're going to do now is we're just taking, I'm going to remove this percentage here so I don't get confused next time. We're taking profit and we're not even using the stop here. We don't need that, so I'll just leave that out of the way. And we're just going to allow this to play out here, this top to play out, okay? And then we'll look for some sort of correction here, and then we'll look for the next setup on the other side. So I'm happy with that. So Goldman's is the next one. I just really want to save this as well. So with Goldman's here, just on the 4-hour chart here. First of all, let's just go back a little bit here. Let's just see what we got. So there's a couple of ways to count this here. I'm counting it as 1 and 2 here, then 1 and 2 here, and then up for 3 here for that. And this here, don't worry about this stick here, that's just the length of all of that as wave 1 here, which is equal to this one here, which we need to be a little bit mindful about this now too, because we've got 1, 2, 3, 4, 5 here. So I can use it as wave 3. If I use this here as 1 and 2 here and 3 here, that would leave wave 3 longer than wave 1. That's cool. Wave 4 would pull back to the 38.2% retracement level, which would be in here onto the 200 area here. So we can expect that to pull back into this space before moving up to here. Now, the flip side of all of this as a bearish move to the upside, I'll just go to my 2-hour chart. So picking it up off the low here, this would also look at an ABC pattern that's completed as a correction. So 1 and 2 and 3 and 4 and 5 here for the A wave, and ABC here for the B wave and the C wave here. There is equality because the length of wave A here would also equal the length of wave C here. So in terms of a correction, this is what a correction that could be finished right here, right now on this, and can move lower from here. At the same time, we're expecting it to move lower, unless I've counted that wrong here. Let's just go in and have a look at ticks here. I have to go to 100. It's going to open up on 20. We don't want that. So I want to go to 100. So, yeah, obviously we're looking for a long trade in here too. So if you've got that, then that's fine. But let's not worry about that. That was just some, this was our target area here. This is another way we could have looked at wave 1 here as well. So I'll just leave that to the side here. But what I'm interested in here is that, I'd have to look at that as 1 and 2 to here. I'd have to look at all of this as the 3rd wave in here somewhere. And the 5th wave. So quite comfortable for that to be done and dusted there. 1 obviously for 2. I mean, that creates the short trade. If you're trading against, if I had to trade against the trend here, I could see that the market had moved down and gone back up and retested it and failed and couldn't get back up there. So that becomes the trigger for the short trade here. And that would be where the stop would be at this point in the game. But I'm not that interested in trading against the trend here at the moment. So I know the Nasdaq and all that is up. Nasdaq's bit on this is not in Nasdaq stock by all means, but it's certainly been lifted from the Nasdaq been leading to the upside, and it's at 10,000, so we're expecting to see a bit more of a vibration there and weakness come in. So this could also be viewed as one. It looks a bit corrective to me. We'll just see if it drops below the 10 here, then you'll know that it's coming down from that point. So I'll put that over this side here. Because I'm doing this because I know that the S&P 500, we're looking for another little move to the upside here, so that could go with that here as an A and a B and a C off these lows here. I can see there's a bit of a continuation pattern here, so we could drop, would probably drop a bit lower than that here. Let me just look at this a different way here. Yeah, right. Okay, so I was just looking at where the 38.2% retracement level would come in as a wave 4 pullback, and it would leave this little one here as wave 1 and 2, which I kind of liked when I looked at this, because then it left me with 1 and 2 and 3 and 4 and 5 here for that. And a pullback at that point, so up for 1 and back for 2, up for 1 and back for 2, and then building up that side. So that works for me, but we'll just see. We don't really need to be in this here at the moment. So just go back to the 4-hour chart. So our main game was to take profit at 220, right? So we've done that. We went long here. We moved the stop up, and that was our target. So we're out of this situation now, and we're looking for some sort of pullback here. So let's just allow that to play out here now, and we'll pick that up. I'm not really, I'd probably look to go short if this, if I see a total impulse wave down here and we find the 200 here at the resistance, then we can look to go short, and we'd be looking to go short below this low here in that case. And that's fine, because we look at this as an A and a B and a C, as I just mentioned before. So there's nothing really to do here. We've had our cake, and we're off enjoying that. So we've done our business here for the time being. So I'm just going to leave it at that for this. I'm just going to move this. Don't need that there for a while. And I'm aware that we can make another little high here, but if we do, I'm not that concerned about it. We've like I said, we've had a good run here. We've done what we're supposed to do, and now I just want to see where we are with this. But as I mentioned, just to recap this here, that we could certainly be in a top situation here as an A and a B and a C wave here for this. So we'll just allow it to play out, and hopefully we can see some type of corrective pattern here, and then we can make a move again for that. And in the meantime, there may be just one more little push up here before this comes back down here as well, or it can just drop from here. But either way, it doesn't really matter at this stage for us, so we're out of that. And we're going to have a look at Exxon next. Exxon Mobil. So one of the things with this market here, obviously crude oil plays a part in this. So for TradingLounge clients, then you need to have a look at the oil charts that we've got for crude oil, and you'll see where we are for that. And for this one here, we've been looking at this in two ways. We've been looking at this here as a big move down through here as wave 3 and coming back for wave 4 here. And yeah, that top can be in play there, and we can see a deeper pullback emerging from this, or even further down from here, or at least we'll look for something like this here, pulling back to the 50-60% retracement level here. This can be countered correctively through here as well for this, so that's okay. We're also looking at this in a bullish light as well, just to make things a little bit more tricky, and this would be more in line with our crude market, our Elliott Wave on crude oil on TradingLounge website. So you'd need to check that out, and you'd see this counted a little bit differently. Don't worry about this spike here. It's just the market maker thing. And let's go in and have a look. So on the 4-hour chart here to start with, this is how we've been counting it. We've been counting from the low here as 1, 2, 3, 4, 5 for the A wave, ABC for the B wave here, and then up for 1 here, back for 2 here. And I was looking at all of this as wave 3 here, so I'm still looking for one more little high here. The 38.2% retracement level for this is bang on the 50 there. So delete that. So what we could be getting here is a bounce off the 50 to have one more little high here, and then rolling over from that point there for that. Or we're going to come down through here, bounce off this here, and move down lower from this point here. This is the 50-60% retracement level from that point there. We can also use a bit of that there as well, and almost like Goldman's in a way as well. There's also nothing to do here as well. We talked about being long in this area here up to the 50 area here to take profit and to be done with it at that point, so that's good. We're also, you know, this is all about the 50 here and major trading level. So if we give this enough time here, what we're going to see once it matures, we're going to see this level here as support or resistance. So then we will make our move on this. Okay, so it doesn't matter for me if this just goes up to this point here and then drops, or we just drop from here in this. It's because when you look at our crude oil chart, you will see that we've counted this in here as a bit of a triangle pattern in here. So that's why that fifth wave can be sitting in there already on this here for that, counting 5 waves up here. I shouldn't really use that there. I should really use the C wave there. So that can already be in place there for that. But you have a look on our crude oil chart. So anyway, this is where patience comes in, because all we need to do is just allow the market to vibrate across the 50 a few times, and then it's going to settle on there as support or resistance, and then we'll take our trade from that point. So there's nothing to do here. You probably only get chopped up if you move into this, so just be a little bit mindful of that. Okay, that's it. Well, thanks for tuning in, much appreciated, and appreciate the support as well. Cheers.